can you believe the year we've had? After decades of waiting, our favorite metal has finally shattered records. We're here in November 2025, and just a few weeks ago, silver officially hit its all-time high of nearly $55 an ounce. The big question now, as the market consolidates after that massive surge, is what's next? Is this the top, or is this just the first chapter? Today we're breaking down the factors that drove this historic rally and laying out our outlook for silver in 2026. 2025 was a perfect storm, and we need to remember the core drivers. This rally wasn't just speculation, it was fundamentally driven by three main forces. First, structural supply deficits. The market is running on a multi-year deficit. We simply don't have enough mine supply to meet demand, leading to rapidly declining global inventories. This scarcity is a hard physical reality. Second, the industrial demand surge from green tech. Silver is indispensable for the green revolution. Solar panels and electric vehicles are demanding more silver than ever before, accounting for well over half of global industrial use. This secular trend is a long-term price anchor that will not reverse. Third, geopolitical safe haven status. Persistent global instability, inflation concerns, and a flight from fiat currencies drove massive investment demand, providing the pressure needed to push prices past that $50 psychological hurdle. To sustain these new high levels and push even higher in 2026, the market will be looking for continuity in these factors. The industrial engine is crucial. If the global push for solar and EV manufacturing accelerates as expected, analysts are predicting the deficit will remain huge. Some major banks are already forecasting silver to average $56 and possibly hit $65 in 2026, based on this tight supply-demand outlook. Next, we watch monetary policy and real rates. We've already seen the Federal Reserve start cutting rates, which was critical to the 2025 rally. Continued lower interest rates throughout 2026, driven by economic concerns or the necessity to ease debt burdens, will keep real yields low. Low real yields make non-yielding assets like silver and gold far more attractive to large institutional money. Finally, we need to see continued investor and central bank demand. The rally to $55 has brought massive new attention to silver. Crucially, we're seeing central banks starting to look at silver as a reserve asset. If this institutional buying continues, the physical market pressure will only intensify. Technically, silver has made history, but it's currently in a healthy consolidation phase after that $55 high. The key now is for the price to hold $45 to $48 as a strong base. If we hold this new floor, the technical path remains clear for higher prices. Now let's address the elephant in the room. Can silver hit $100? While it sounds aggressive, if the structural supply deficit worsens and the industrial and safe haven demand continues to converge, some analysts are saying a push toward $100 by the end of 2026 is certainly within reach when you consider the inflation-adjusted highs. So, what's our strategy as we head into this exciting new year? Patience and accumulation. Don't chase the daily volatility that naturally follows an all-time high. Instead, use this consolidation phase to execute your dollar-cost averaging strategy. Remember, we stack for the long term, betting on the fundamentals that just pushed this metal to historic highs. The story of tight supply and booming green energy demand isn't over. 2026 is set up to be another powerful year for the white metal. What are your predictions for silver in 2026? Are we hitting $60? Will we see triple digits? Let me know in the comments below.